this damn virus. This damn virus is out there, and the numbers aren't big enough to where your chances of dying or catching the virus are very high. They're really just not very high, just because I've analyzed this data very carefully. But it does create uncertainty. It does create fear. There is always the possibility that it could just be the beginning of it could be the beginning of something bad, right? And so if you want to know why the stock market is crashing right now, it's mainly because there's some data coming out stating that there are some resurgences of the virus, particularly in states like Texas, Florida. I think even California was on the list, which is kind of surprising because California was actually really, really diligent about really locking things down as much as possible. So I was a little bit surprised about California. And now New York is doing really well. New York's economic indices are much, much stronger. New York's health measuring sticks, whatever they use to measure the new infections, that's actually much better. And so it's not all doom and gloom everywhere. But in China, they actually shut down the largest market in Beijing in order to deal with what they saw was a little bit of a hot spot in the virus. And that's a big deal for China because China they just lie. They don't tell the truth about what's happening with the virus. They lie because they do put economics and feeding 1.2 billion people. That's usually going to take priority over the death of 1,000 people. They'll let 5,000 people die so they can feed 1.2 billion. Are they right or are they wrong for that? I don't know. I'll let you be the judge of that. But the fact that China reacted does say something because it says that they probably know more than what we know. And China is one of those places where and they have a whole financial theory about this. China's not a place where you're going to get direct information. You have to look at signals. And it's just like in a relationship. They say, don't listen to what somebody says, watch what they do. Well, with China, don't believe what they say. You watch what they do. So when you watch what they do, you see that China's shutting down this big market, but they're saying, oh, but we only have 79 new cases. Well, why would you shut down your biggest market in all of Beijing over 79 new cases? Especially with the mortality rate being 1% or something. So maybe 2 people out of 79 will die. So chances are with China, there's more to it than meets the eye. And it is something that you have to pay attention to. In general, the other factor that's been really big is a lot of people just felt that the last 2 weeks have just been outright insane. If you've been invested, you know that money has been made hand over fist. This recovery happened faster than it should have happened. And a lot of people felt that the market moved a little bit premature. It's almost like if you're looking for a good relationship, you're looking to fall in love, and somebody proposes marriage to you in the first week, there's a good chance something might be wrong with that. That might be a red flag. So the market is sending a lot of red flags. It's giving the signal of a recovery well before the recovery is actually secure. Even I was a little bit worried. Most of the time we don't worry or get upset when we're making money too fast, but usually if something's too good to be true or appears to be too good to be true, it probably is, right? So in this particular case, you had a scenario where all the experts were speculating on why is the market moving so fast? Why is it just skyrocketing so quickly? What's going on? And the general conclusion is that the market might be wrong on some of this. There might be a little bit of what you call irrational exuberance. Now, so you might ask, well, why, Dr. Boyce, would you keep buying stocks if you know that these stocks are overpriced? Well, it's because I'm a long-term investor. And as a long-term investor, I know that based on the history of this country, chances are in 5 years, everything that we're buying, these entire portfolios we're buying, are going to cost a lot more than what they cost right now. I'm not saying that that's going to happen for sure. I'm just saying that that's what's happened every 5 to 10 years for the last 120 years. So given that, if you go back over 100 years, because that's one advantage I can give you guys as a scholar. We're not just people who go read books about finance. We write books about finance. And also we don't just sort of look at what's happening in the market. We actually research what's happened in the market over the last 120 years and go through, thousands of gigabytes of data on thousands and thousands and thousands of stock trades to understand where the patterns are. And in a couple of the patterns you can almost rely on historically anyway, is this upward trend that if you're just investing in America, as Warren Buffett says, and you're diversified and you're buying and you're holding, you're going to have an upward trend in your portfolio most likely, because that's just always been the case. And then number two is are these reversals, these short-term reversals. What goes way up is usually going to drop. There's going to be a cooling off period in what they call profit taking. People are going to come in, take their profits and run or whatever, right? And then if it goes way down, you might see a reversal in the other direction where people start looking for bargains, bargain hunting. So all the different types of investors make the market move. Right now, they're all concluding that this fear is a big word in the market, right? This big fear of a resurgence of a second wave is just a huge factor. Now, what is also a huge factor, though, is not just what's expected to occur with the virus. The virus is not driving the entire narrative. What's driving the bigger narrative, in my opinion, is how does society respond to the virus? How does the government respond, right? Think what you want about Trump, Biden, all that. I don't care what your opinion is on any of that. But what you do want to pay attention to is what are the government officials saying? And so let me just say this. Larry Kudlow, who's the White House economic advisor, has been speaking the same language as Treasury Secretary and everybody else. That they're pretty much saying, look, we're not going to shut down the economy. The economy will not be shut down again at all. That's huge. Because if they were to come out and say, oh, yeah, we're going to shut down because the second wave is going to be a big deal, then you would probably see even more decline in the stock market. Now, can we as a country push through and, have an open economy and still control the virus? That's yet to be determined. But what they've realized, what they're concluding, and I don't know if you agree or disagree with this, but they're looking at the last 3 months and they're saying, man, we shut down everything. We really, really shut down everything. And we just had a big mess. We had riots in the streets. We had people losing their homes, losing their jobs. I got a message the other day. Somebody sent me a GoFundMe account for another brother. My heart went out to him. He's a strong black man who's a truck driver, I think, and he lost everything during the pandemic. No job, no income, no nothing. And he was really openly reflecting on how he was going to tell his wife he lost his job, how he was going to find a way to take care of his kids. And I gave to the GoFundMe, because my heart went out to the poor guy. And a few people did, and the thing is that's not a sustainable long-term solution, right? So really, I think in this whole scope of things, where we're getting to is that we have a society where we're now kind of having to accept this idea that that moving forward means that we're going to have a price to pay as a society, right? Moving forward means somebody's going to have to pay a price. I had a friend that said we should stay shut down indefinitely forever and ever. And I just told him politely, I said, look, man, you're a millionaire. I know how much money you have. I know how much money you've made. You're not a guy who lost his job. You're not a guy who can barely pay the bills. So your opinion only means so much when it comes to having to make that trade-off. And so the economy's not going to shut down. I can't say I disagree with that decision. What I do think is going to be really critical, though, is the market's going to pay close attention to all new data on trials and studies about a new vaccine. The vaccine is the kicker. When the vaccine gets released, when some company comes out and says, dun, dun, we have a vaccine, and all of the headlines are saying, vaccine, 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 you're going to most likely see an insane surge in the stock market. An absolutely insane surge. So what does that mean for me as an investor? Well, it just means, if you hold on till the vaccine comes, you're going to probably make some money in the short term, right? Is there any doubt that a company is going to come out with a vaccine? All the best companies in the world are all racing and spending God knows how much money trying to come up with a vaccine. Do you have any doubt whatsoever that day is coming? No, the question is not if, the question is when, right? So, again, it's like watching a movie. If you watch a movie and they make you think that the hero is going to die, and they put him on the ledge of a volcano where the bad guy's about to throw him in the volcano and kill him, you shouldn't get worried too much because deep down how this movie's going to end, right? That at some point he's going to find a way out and he's going to kill the bad guy and he's going to kiss the girl at the end and go on with his life, right? So when it comes to all of this, there's a point where the hero will survive. We're going to kiss the pretty girl and live happily ever after. The question is, do you get caught up too much in the movie to the point where you think that the movie's real? Do you really think the hero's going to die? Do you really think the market's going to just plummet and never recover? Well, if you believe that, then we're not thinking the same way. So, long story short, and I've spoken on this. I tend to be a bull. That's my personal preference. Mainly because broad portfolios in the stock market held over a long period of time tend to have a bullish trajectory. Short selling can work, but it tends to only work in short-term situations, and it involves a little bit more gambling, a little bit more stock picking that I'm comfortable with. I don't see short selling as a long-term viable investment wealth building strategy. And that's what I see the value in the stock market as a tool for building long-term generational wealth, not as a casino that will let you make a fast dollar. So in general, I can't tell you which short plays are going to work. I can't tell you which stocks are going to plummet, all this other stuff. I can tell you which companies are strong, which ones are weak, how they're going to respond to the turmoil, and I can tell you generally what the market's most likely to do. And I think that that's something you can hold on to as you watch all the ups and downs that might make your stomach hurt. Okay, so anyway, I'm about to go, guys. I just want to remind everybody, if you're in the stock market investing class, we're going to have a Q&A tonight where I'll answer 1,000 questions, and we'll just sit there and I'll just literally answer your questions the entire time. If you want to be a part of any of that, you can actually get started in my Black Stock Market program for $1 for the first month. The first 30 days are just $1. So feel free to go to theblackstockmarketprogram.com. That's theblackstockmarketprogram.com. And also, those of you in the master class, we meet Wednesday night. We're going to actually start with getting our investment clubs together and stuff like that. So if you'd like to go take a look at the masterclass, feel free to go to drboycemasterclass.com. All the content's recorded, everything's there. It's an amazing program. A lot of people like it, so feel free to go to drboycemasterclass.com. And then last but not least, those of you who still haven't gotten started, who are watching from the sidelines, you want to learn to buy your first share of stock, feel free to go to firstshareofstock.com. That's firstshareofstock.com. That way you can get started and get on the list, and we can get you going. All right, guys, so I'm out of here. Have a good day, and happy investing. And if anything changes, I'll check back in. So I'll see you guys soon. Take care. Bye-bye.